Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we're going to be talking about the Bollinger Band scalping strategy, a highly effective method for capturing quick profits in a volatile market. So we're going to learn how powerful this indicator works, the step-by-step strategy to apply it to your trades, and the common mistakes to avoid so you can trade with confidence. So why not stay tuned until the end of this video, because every detail we'll cover could be key to improving your scalping game and boosting your results. So let's get started, and we get started by understanding what the Bollinger Band is. And we all know that the Bollinger Band is a very popular technical indicator. It consists of three lines, as you can see on my screen. The first line is the middle line, which is a simple moving average. We also have the upper band, this red line you can see on my screen, which is a standard deviation above the middle band. And we have the lower band, which is a second standard deviation below the line. Now, these bands adjust dynamically to the market volatility. They widen during a high volatile market and they contrast during a low volatility market. Now, the lower and upper band help identify potential overbought and oversold conditions. In ranging markets, price often bounce between these bands, while in trending markets, price walk along one band, indicating a strong momentum. So let's see how we can implement this Bollinger Band scalping strategy to our day-to-day trading lifestyle. The first strategy we can use is called the Bollinger Bounce strategy, and this strategy works best in a ranging market. We're talking about a ranging market, and to look for a very good example on the screen to let us understand the basics of a ranging market, how we can apply the Bollinger Band to our ranging market. Now, if you can look at my screen, you can see that this is a typical range where price is moving typically sideways. So there are some criteria to make use of this strategy I'm about to let you know. There are some criteria you need to know. Now, they are called entry rules. So first of all, the first rule is to wait for price to touch or slightly penetrate the lower band or the upper band. Now, in terms of a buying signal, you wait for price to penetrate or touch the lower band, while in terms of a selling signal, you expect price to touch or penetrate the upper band. Now, when price touches this area, the second rule is to look for a confirmation of reversal. You want to look for your candlestick pattern, your engulfing candles, your dojis, your hammer, your evening star. Those are the candlestick pattern. Your pin bar, those are the pattern you are meant to look for at this lower band or upper band region. Now, the third step is to always enter the trade in the opposite direction of your initial move. So let's say we see price in this ranging market, we come in contact with this lower band. We see that price came to this lower band, gave us a hammer before an engulfing candle. This is a typical example, and at this area you can enter your trade. At this area, stop loss below your band, your lower band, you aim for the upper band or you aim for the middle, but in this case we'll aim for the upper band, which will give us a typical of 1:1 risk to reward ratio. There are some exit rule you need to know. The first exit rule is always set your take profit target to the next band or your middle band, but in this case the middle band wouldn't give us a satisfied target, so we'll set it at the next band area. The second rule for exits can be, for more aggressive trades, you can aim for the opposite band, like I said. Now, the third rule is always to set your stop loss beyond the recent high or low. Now, in this case, you saw where we entered, set our stop loss just below the recent swing low. Now let's go to the next strategy we can use with this Bollinger Band strategy, and it's called the Bollinger Squeeze strategy. Now this strategy focuses on price or period in price of low volatility before an explosive move. Now, there are certain rules you need to know before taking this strategy. The first rule is to identify the band is contract. It is in a contract state tightly around the middle band, and as we can see in this area, from here to here, we can see that it's tightly along the middle band. This is a contract. This is a contract phase in the market. Now, the second rule is always to wait for a breakout above the upper band in terms of a buy signal, and you wait, or in a sell signal you wait for a breakout towards the lower band. Now, after your breakout, the third step is to confirm the breakout direction using your indicator such as your RSI or your MACD. In this case, we are going to apply our RSI to the screen to further identify what we are trying to say. As you can see in this area, when it was squeezing, it broke out to the downside, broke back in, broke out to the upside, and from the RSI we can see price is trending above the 50 region, which means that it is in a strong buying area. And as you can see, it peaks over, which is a sign of overbought condition, but at the same time price consistently stayed above the 50% region on our RSI, signaling signs for higher prices. Now, there are some certain criteria you need to know about exiting trade. Now, if we are to take a trade, we wait for price to break out in one direction after the contraction phase. We wait for price to break out and come back to retest the middle band. We will set our entry when we see our candlestick pattern. In this case, I will enter the moment I'm seeing my hammer candlestick pattern in my middle band area. My stop loss just below the recent swing low, the most recent swing low, my stop loss below that area. Remember, this is a scalping strategy. Then you can aim for, now the exit rule, your stop loss should always be at the opposite side of the band. Your exit rule, as soon as price shows signs of slowing momentum or hitting your predetermined target, you can exit your trade. These are the rules for execution. So you can wait for price to get to the opposite band, you exit at that area, or you can wait for price to show signs of coming back down, signs of reversal, then you exit your trade. Now, the third strategy we are going to talk about while using the Bollinger Band for scalping is called the Bollinger Band combined with the RSI. Now, by adding the RSI to the Bollinger Band, this can improve your accuracy by confirming overbought and oversold conditions in the market. We start by applying our RSI and our Bollinger Band to the chart. Let's not forget our Bollinger Band has to come with a standard setting of, it has to come with a standard deviation of 2 and a length of 20, standard length of 20, a period of 20, sorry. Then you go over to your RSI. When you include your RSI, it has a setting of 14 period. 14 length, that's what we're talking about. Then we just need simple entry rules, which I'm about to explain to us. The first rule is to look for price to touch either the lower band, and the RSI should be below 30 for a buy signal. Now, when price touch the lower band at this area, as we can see, this is the lower band where price touches at this area. We look at our RSI, we can see at this area it is typically below 30. No, let's look at this area. This is not below 30. This is, as you can see at this area, this is 32. So we have to see it's below 30. At this area, when it touched the lower band, judging from our RSI, we can see that at this area it is still not below 30. Now we look for an area when it touched the lower band and it is below 30. Now, judging from this area in the market, as you can see, price came in contact with the lower band, and at the RSI indicator, this is showing that it is below 30. This is 29, signaling an oversold condition. We have to look for buying signals. So this is a typical example for us to take a long position from this area. Now, in terms of a selling trade, would have to look for price to bounce off the upper band. When price bounce off the upper band, we would expect price to be trading above 70, and at this area when price bounce off the upper part of the band, we can see that price is above 70. At this region is above 70, this is 71 at this area. This signals that we can look for a selling opportunity at this area when we have seen our candlestick confirmation. You can enter your sell signal after this bullish engulfing bearish candle. You put your stop loss just above the Bollinger Band or just above the previous swing high. Then you aim for your 1:2, or you aim for the lower band area. These are ways you can enter and exit your trade. Now, to exit your trade, you always target either your middle band. In this case, the middle band is so squeezed, so we cannot use the middle band as an example, but we can make use of the lower bands as an area to exit your trade. We can also exit our trade using our RSI. The moment we notice our RSI cross back to a neutral territory. Neutral territory is from the 50 region. The 50 region. In terms of a selling position, remember we are looking for price to be above 70. The moment price is above 70 at this area, we enter after our confirmation, stop loss above the previous swing high. The moment we notice price is below, has come back to a neutral region, which is at this area where price came back to a neutral region at this area here, you can end up removing your trade for 1:2 at that area. This is how you can exit your trade. Now there are some step-by-step plan that we can use for our strategy with our Bollinger Band. The first step is to always set up your chart. You have to set up your chart. You have to apply your Bollinger Band to your chart. How do you apply your Bollinger Band? You go to your indicator zone, you type in your Bollinger Band. When you type in your Bollinger Band, this is the indicator. You will apply it to your chart. You will also apply your RSI to your chart. The second step is to always identify the market condition. You have to determine if the market is ranging or trending. As you can see in this area we use as an example, it is in a ranging market. The market is moving side by side. That's why we are able to take trades that are bouncing up the upside and bouncing up the lower band. Now the third step is to always wait for a signal. You have to look for price to interact with the band and confirm with additional indicators such as our RSI. So you trade only when price has bounced off the upper band or the lower band. The fourth step is to always enter the trade based on a bounce, squeeze, or combined with signal. Now the fifth step is always to remember to combine this with a strong risk management strategy. You would always have to place your stop loss at a most recent swing high or low, and you have to use a good risk to reward ratio, at least 1:2 or 1:1.5. This should be a standard risk to reward ratio. So before you take a trade, always project, is this trade going to give me at least 1:2 or 1:3? This will help you to further capitalize on the market when the market moves in your favor. Now the sixth step is to always exit your trade. You have to exit your trade. You don't hold your losers too long. You don't see signs of reversal and still keep your trade. You have to exit at key positions, which I have already explained to you. You close your trade at key levels like the middle band or the opposite band based on your strategy rules. So if you took a trade from, let's say, this middle band area, this lower band region, after your engulfing candle, you put your stop loss above. When you take your trade, you can always exit your trade when price came in contact with this middle band, which will give us a standard of 1:3. You can also exit your trade at when it came to the upper band, which will be 1:4. This is how you should exit your trade. Always predetermine your entries and your take profit region before you execute your trade. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. So if you found this video helpful, do not forget to like, share and subscribe. Always turn on your notification bell so that you wouldn't miss out on more trading tips and strategies. Thanks for watching, and I will see you in the next video.